Yo, what is going on, everybody? Welcome to day 4 of the Nick Graves Trades Bootcamp. Today I'm going to be going over a very, very important topic for you guys. We're going to be going over risk to reward. Risk to reward, for those of you that don't know, is basically just how much you're going to risk to make in a trade, right? Everybody has, I guess, different types of like set RRs. Everybody's different. Some people have X amount, like a specifically set RR. Some people are discretionary. Some people don't have RR. Like, everyone trades it differently. But risk to reward is a couple of things. I'll show you this right here. So if we're in a long position, right, and we're looking to trade, let's say this is just like the 1 minute chart. Let's say we're right here. So we're in at this price. Our stop loss is at this wick low. Our target's at this high, right? Right now, we are risking 96 points to make 450 points. That risk to reward is a 4.6 to 1 risk to reward. What does that mean? Basically just means for every, it's 4R. So for every 1 risk, that's 1 reward. That means there's 4 R's to the 1 risk, if that makes sense. Just times by 4. It's pretty simple stuff. But what a lot of people don't understand with risk is risk management with trading, and this is some sauce for you guys, but risk management with trading is not about the actual numbers on the screen. Like, obviously, yes, like it's about the numbers on the screen, right? But at the same time, you have to realize that with trading, the risk that you're taking when buying an account, say $100 for a 50K, right? That risk that you're taking to buy the account, that's the real life money, right? That's real life money. Anything that is in your trading account at this point, it is not real money until it hits your bank account, okay? It is not real money until it hits your bank account. So what does this mean? This means the actual in real life risk that you are taking has already happened. You've already paid for the account. The most amount of money that you could possibly lose has already happened. You can't lose any more money. The money has came out of your bank account and now you have your evaluation, right? So let's not be scared to trade it. I understand sometimes trading an XFA is scary, but you guys have to understand, like, once the money's out of your account, there's no risk on the table. You're practically trading everything for free because the money's already came out of your account. It's not like you're going to lose $2,000 of real life money. It's all paper. The only money you're losing is $100, right? So that I really want you guys to realize that, okay? That is just some free sauce that I want to give out for you guys that just kind of opens up people's eyes to specific things, okay? But let's get into to actual risk to reward on the charts, right? A lot of people, like I said, have different sorts of RR. Some people just do 1-to-1, 1-to-2. I don't really have a risk to reward. Me personally, I don't set take profits. Reasoning is because a lot of times I'll set a TP in a specific level and it'll keep going past my TP. So since then, I've learned to trail. I set my TPs as wicks. I set my TPs as basically like this. I'll go like this. Like, say this is like my TP. I'll have a line right here. So once price gets here, I'll trail my stop loss really, really tight at point of invalidation. But I don't have a TP. So if it wants to run past my TP and go to like up here, cool. I'll make more money than I would have and I'll trail tighter. I just don't set TPs. Some people do, some people don't. I don't. I like to trail instead. You can make a lot more money than if you set specific TPs, right? But with understanding risk to reward, right? We have to know 2 things. One, how much are you willing to risk? And number 2, how much are you willing to make? So a good question that I like to tell people to ask themselves before entering a trade is, how much money would it actually hurt you to lose in real life money with trading? As in, you're risking $400 in a trade. How much would that hurt you in your heart if that was real life money? How much would losing $400 do for you? Like, how much would that hurt? That's a good question to ask yourself before you hop in a trade. Should I really be risking this much? Should I be risking more, right? Am I maybe not risking enough? But what I want you guys to know is, having a good risk to reward is literally the key to profitability. Risk to reward is 80% of your trading. It is literally one of the biggest things that can come from a profitable trader, is understanding risk to reward. I teach the Nick-Wick theory. Obviously, I can't really show you guys too much because people pay for it, but like the Nick-Wick theory is something that has completely expanded my trading horizon with risk to reward, and it is what's made me $150,000 the first 3 months of this year, right? But just understanding risk to reward. I want you guys to look at something, okay? I want you guys to look at this. So say, okay, cool. We get like a sweep or whatever. Let's say, boom. Okay, we sweep this low, right? We get an insta CSD. This is your change in the state of delivery now. This that we just talked about. This candle high. Boom. Cool. You enter right here. You're in a long. Stop loss always goes at the low if you're taking a CSD entry. What just happened? Sorry, guys. So cool. Our stop loss is at this low, and our take profit, let's say it's up here or something. I don't know. Cool. All right. So say we're in this trade right now, right? The trade's running our way. We are risking 10 points to make 127, right? Just look at this. 126 points to 10. That is a 21-to-1 RR. That is like the first initial entry because there's really no like real liquidity sweep because there's levels to this. The first entry is the liquidity sweep. There isn't really like a clean one. So really the only entry here would have been a CSD. So enter off that. The next entry. So, okay, look at this. Risk reward on this, 21, okay? Pay attention. Next entry we get is like this fair value gap entry, okay? Right here. Boom. That's the next entry. Look what happens if we enter when it taps in. Now look at this. Let me move this down. So now it cuts it more than in half. So look, now we're risking 28 points instead of 10, and we're even higher up, right? So now the RR went from 21 to 7, okay? Now, if you don't enter, if some of you, like, because I know some people wait to enter until it gets outside of the fair value gap. Now look what happens. If you wait till it closes above, your stop loss always goes at the swing low. Look what happens now. It goes from a 21 RR all the way to a 3.5. That's how important your entries are in understanding your risk to reward. That's a huge difference, guys. That is 17 RRs different between entering at the low and entering at this fair value gap, right? And understanding where your stop loss placement is supposed to go. So I just want you guys to show like the difference between risk to reward, right? The last thing that I'm going to cover in this video is understanding like how many trades to take, I guess, with the risk to reward. So what I do is I'll take anywhere between 1 to 5 trades a day. It might sound like a lot, but if you guys really knew how I traded, it would make sense. So this is how it goes, right? If I take a loss, the next trade, I'm risking the same amount as my original trade. If I take another loss, I'm risking half. And if I take 3 losses, I'm off the charts. If I go break even, I'll still risk the same. If I go loss, break even, loss, I'm off. If I go loss, 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 obviously I'm off. If I go loss, win, that win I'm going to use as leverage to basically use more. If it's like some like scalp, if I get stopped at break even or stopped a little bit in profit, I normally would take, like I said, 1 to 5 trades a day, depending on how it goes. But with risk to reward, you have to understand if you lose your first trade, you should never be risking the same amount in your second trade. Is kind of like the point that I'm trying to hit on here. But seriously, guys, if you guys can get risk management down and you have like a set amount that you like to risk per trade and convert that into micros or minis or whatever you trade, like guys, that will take your trading to the next level. Like it's not even close. There's so many different ways to, I guess, look at this. But understanding like that RR is one of the single-handedly most important things in trading, because it's everything. It's how much you're risking. If you don't have a stop loss, you're going to blow your accounts, right? So you have to understand how RR works. Like you can't just enter a trade, pray to the God, and hope that it hits TP. Like, no, you have to have a plan coming into your trades, right? So I just wanted to give you guys some free sauce. Again, this is somewhat psychological, but also on the charts. But yeah, guys, this is all I have for Bootcamp episode 4. Again, this is still like somewhat like the beginner stuff. I hope you guys are enjoying these videos. Make sure to like, comment, subscribe. And yeah, stay tuned for the next video. Love you guys. Appreciate you guys. And I'll see you guys tomorrow. Peace.